Hey, good morning, guys. This is another subscribers only stream, right? I am currently at the moment, I got no real interest putting out public streams. When people are only looking for long calls, they're not willing to listen to logic. Um, I guess in a grand scheme of things, it's one of the reasons that majority of retail stay broke. So in the meantime, right, these shorter time frame things that we've been doing, I want to cover some of that. I want to cover some of the longer term stuff because, as you know, myself and Paul, we are longer time frame traders, and the whole purpose of this Discord server is not to take the knowledge and apply it to kind of shit coins, because it doesn't really work for shit coins, right? This is all about sentiment. It's all about what composite man, what the institutional players can actually do to an instrument and how they manage an instrument, right? The core concepts, if you apply proper risk management and you look at some of the techniques like the liquidity pools and the pots, the auction areas, some of that, of course, that's going to work, right? But in the grand scheme of things, the idea is to almost take your mindset away from what you think it is the way to make money to actually how you make money, right? So, I've shown things in the Musing channels and obviously in the prop firm channel as to how you can take these trades. Some of these trades have been a 15-second time frame, right? Now, I'd rather make 5% in 3, 4, 6 minutes than to sit on Bitcoin and hope that it doubles over the next 18 months, right? So, in the grand scheme of things, in terms of shit coins, altcoins, whatever you want to call them, myself personally, I'm only interested in XRP, right? There's nothing else of interest. There's no technology that I've seen and I thought, wow, I want to be involved in that. For me, XRP is the only thing outside of Bitcoin. In terms of Bitcoin right now, I'm going to say it again. There's no change, right? There's absolutely no change as far as I'm concerned. This for me at the moment is probably very likely an overextended B, right? It's a hyperextension, which means we've got a long time, in essence, to come back down, right? And I don't mean a long time to come down. It'll be down for a long time, is what I'm saying. So in this particular video, I'm going to cover a couple of things like the point and figure, which is why I've got it on screen. I'm going to go through the advanced get software and show some of the Forex pairs in terms of where we are. And hopefully this answers a couple of questions, that you might be thinking. I'm just going to then go through some of the charts and just try to do this kind of as quick as I can so it's not dragged on, right? But I want to put a bit of depth. So first things first, let's start with a couple of things that I've seen recently, right, in the last kind of 24, 48 hours. So one of the things was on the visitors section. This last one, this is basically a Monte Carlo simulation, right? So there's loads of settings, loads of variations. In the grand scheme of things, it, it's it's just almost like a random number generator, right? So I wouldn't put too much weight on something like that, right? It's some of these people are doing these things and saying these things, and as you can see, this is a flip of the coin, right? One is saying we're off to probably $10 million, and the other one is saying we're off practically to nothing, right? It's never going to be as easy as that, right? All you got to do is define your logic and then break the logic down and apply that logic into why you think it's going to do what it does next, right? This is the main reason I have zero interest in these kind of shorter time frame swings. I don't care what Elliott bias you have in terms of an ABC or a QXA. It really means absolutely jack shit. What you're looking for is not tops, not bottoms. You're looking for the meat in the middle, right? That meat in the middle needs to have a greater than a 2-to-1 risk reward. Even if you look back, and we're going to use Bitcoin as the prime example, if you look at something like Bitcoin, if you'd bought at 20, right, the chances are the price could have dropped to 10, right? The chances are it could have only rallied to 30, which means it's a 1-to-1 risk reward ratio. That's a terrible trade, right? That's an awful trade. I wouldn't even look at that all day long, right? That's terrible. The fact that we've rallied and kind of hyperextended without any volume is, again, it's just kind of a nothingness, right? So in the grand scheme of things, you're looking for better setups, and there's plenty of them, right? As I've shown on a 15-second time frame in the Musing channel, right? There's plenty of opportunity. So that's the first thing, right? So in terms of the point and figure and this Monte Carlo, let me just come in and show something on the let's go out to a weekly, and I'll show you before I go to point and figure. I'll show you this Monte Carlo thing, right? Which I've just seen something on this. Let me hide my drawings. This was the random walk. Okay, so look, this for me is why it's a random number generator, right? It's just kind of like, these are the potential scenarios. Well, there's a million things that could play out. There's a million things that could happen, right? I think if you're plan B, you're probably seeing this one, right? If you're someone, very bearish, you're probably seeing this one, right? And therefore, you want something kind of in the middle. Now, personally, the issue that I have with a lot of these things, and I have to put these back on, the issues that I have with a lot of these things, right, is if you're being realistic, any move up we see, right, we probably want another move back down, right? And the move back down is to collect liquidity. So in essence, I think we're seeing, right, some of these as moves, right? That's probably my preferred area of interest if you were to look at this Monte Carlo simulation, right? The main issue that I have with obviously all of these is, it's not going to nothing, right? And we're not off to $1 million without grabbing some liquidity. So if I was to really hone in on, one potential option, it would probably be something that looks like this, right? This one here. So if I follow this back to where we come from, right? This for me is very likely as a type of move. If I turn that now off, get rid of that, right? That for me is very, very probable, right? We might come a bit lower here. We might come down and create a spring, down here before we go. But in essence, I don't see much action, grand scheme of things at the moment, right? And there's a few reasons for that. So first things first, right? I know a lot of you, like I said, are interested in Bitcoin. So I'm going to cover Bitcoin kind of first, and then you kind of choose whether or not you want to stay for the rest of the education, the rest of the lessons. So, you know, let's look out at something like a monthly time frame, right? And I'm going to zoom back out to here, put the stochastic on. Now, what you'd like to see is in a bull market type run, right? You want to see this in terms of volume. You want to see this in terms of volume, right? You want to see that in terms of volume. There's something missing over here, right? It's on a monthly time frame. The second thing on a monthly time frame, as I've mentioned a million times, right? We're already overbought, right? And that, these things are all, you know, I suppose reason for concern, right? Logic for some concern, right? So they're the first couple of things. Let's zoom out even further again. I'm going to stick this onto a 3 monthly time frame, right? Now, if we look at where we are on a 3 monthly time frame, we've got 16 days to the end of the 3 monthly time frame. We're already at, I think it was 44 or something that I looked at yesterday, right? I shared this yesterday. So we're already at kind of 44 in terms of the stochastic, right? We're going to close obviously positive. We're going to close up, quite high, which means on a 3 monthly time frame, we were almost in that overbought scenario. Right? We're going to be probably in the 60s, if not 70s. We could even be greater given the size of the candle, right? So that wouldn't surprise me if we're kind of 70 plus in terms of the stochastic on the way to being overbought, right? Obviously, at this particular point, we've gone relatively flat, right? I'm seeing a 3-wave move. You can probably do some extensions and some fib work and stuff on this, right? If we go and let's just do a fib extension from the bottom. We're going to go up high and then back down. Let's just use the average kind of low. We've hit a 1.236 or close enough for me, right? And we've kind of had a rejection. So for me, the fact is we could easily be seeing a simple move from the top. Let's get this out of the way. We could be seeing a simple move from the top that basically means 0, down for A, pull back B, right? And then we come back down for C, which obviously doesn't have to be deep. As I've said a million times, we don't need a 0, we don't need a 12K. We can come down and we can stay 25K, right? And this is where then all the value areas, all the liquidity, the auction zones, right? All of these things will all start to make some sense. Bigger picture, right? So that's what I think we are in terms of right now. And that's why there's no kind of stress, there's no kind of hassle. I'm not really interested. If you take a trade now, it's for 40K euro, we could top out 80. Guys, even that, right? It's a double your money type of 2-to-1, risk reward ratio. And actually it's a 1-for-1 if you topped out at 80 in terms of where you'd want to stick a stop loss. So in the grand scheme of things, right, you've got that coupled with COT. All the logic is just sitting there for me that we're not ready for 100K yet, right? It almost feels impossible. And if this is what we deem as bullish, then as I've said a million times, crypto's in trouble, right? The next thing that I'm finding really interesting, right, is someone asked yesterday, and I've talked to a couple of people in the last couple of days about point and figure, right? So if you're not sure what a point and figure chart is, right, I've just shared a link. I think it was in the, let's just see, I think it was in the crypto chat. Yeah, this one here, right? I'll find out the lessons. I've done a couple of videos. I'm almost certain I've done some videos on point and figure. I've also done a few posts on TradingView, but they're probably going back 18 months now in terms of where we are. So have a little look at this, right? Now, the one thing that I personally like, right, is there's two, there's probably more than two. There's two that I'm familiar with, right? Two that I'm kind of comfortable with. There's two ways to count a projection. Get rid of this little advert. There's two ways to count a projection in point and figure. You have a horizontal and a vertical way, right? So the point and figure is a really interesting technique, right? I always keep my settings to standard, right? So whatever it kind of comes with, it's whatever whatever I like. You don't need to get, complicated with this. You don't need to look for tools and so on the back of this. The general idea is that within the two counts, it gives you kind of a range or a band, right? Now, this is what, for me, I find interesting personally, right? When you have one of these point and figure counts, right? You're going to be looking, and you can do it either which way. You can look for your auction areas, your imbalances, your order blocks, all the different things that you've gone through, your Elliott wave extensions. You can go and put your clustering technique on and find some really heavy zones, right? Obvious point for me is, we've got this massive zone here, right, where the price kind of consolidated before the drop through, right? So that for me is an obvious area of liquidity, right? That's the first thing. Let's just stick on something like a fixed range profile. I'm going to go basically top to bottom. Now, if you look at obviously what I've just said in terms of the profile there, right, you've got an average level, which is, where we're at right now. That average area right now, right, is just basically the consolidation zone center, right? It's kind of as simple as that. Now you can see that without any tools, that's obvious, right? That's beyond obvious. So when we look at this particular point, right, this was definitely an area of interest, right? As an accumulation, which is what I was hoping we were in right now, and I feel strongly that we're not anymore, right? And let me explain this a little bit more. What I would have liked to have seen is a bottom pattern, an AR, followed by the ST, up, back down, right? Potentially down a bit further, right? Doesn't have to be, but that could have been, down to this kind of level. Back up to create a new kind of sign of strength, right? Whether we come down then for a spring or whether we come down and just go sideways, and then I would have liked to have seen us gone, right? The fact is that would have been optimal at this kind of range, right? I'm not looking at a slope in accumulation and I'll get off to $1 million, right? That's, to me, a pile of bullshit, right? In the grand scheme of things, the fact that we've run up would suggest that we're more likely a corrective type move. That doesn't look like a 5-wave impulse, right? Which means we're probably more likely in an AB move, bigger picture. So everything is kind of pointing back to, well, perhaps we're not accumulating yet because we haven't finished the distribution yet. Right? That's kind of scary thinking, but in the grand scheme of things, you have to think from the inception of Bitcoin through to 2021, right? That's over 10 years in terms of a market move up. What makes us think that within 2 years we'll have a move back down? Again, just adding fuel to the logic, right? If we were to come back down and go, we got things like the halving, we got the ETFs. Now, a lot of these people think that, oh, it happened once, it's going to happen again. Oh, it's a cycle and it happens 3 times in a row. The markets don't work like that. Right? If it was easy as that, trading would be a piece of cake, right? In the grand scheme of things, there's a couple of other things that it's just too obvious, right? And I can't stress that enough. So, if we've now identified an area of interest, right, we potentially realize that this looks corrective up. One of the things we can use is this point and figure technique, right? So when I say that there's two methods that I prefer, there's probably a lot of other methods that you could utilize. In the grand scheme of things, you've got a horizontal, right, which basically means you're taking a consolidation like this, right? You'd count the basically the blocks going across on the horizontal plane, right? So you have 1, 2, 3, 4, 5, 6, 7. And then ultimately what you'd be doing is you'd be looking at the multipliers, right? So I think this is a 3 reversal. So we'd be looking at 7. I think I got this set to 1,000. So in essence, you'd go basically 7 times 1,000 times 3, right? Now what you'd then do is you'd take that line, you could draw, was it 7, 7 times 1,000, 7,000 times 3, 21,000. In essence, you'd be adding 21,000 from the top, and you'd be adding 21,000 from the bottom, right? So that's the way you'd look at a vertical count, right? There's a couple of other techniques that you can use on a similar formula, similar calculation, where you actually divide by 3 rather than multiply by 3, right? But it gets really complicated in terms of this, right? So I'm not going to go into depth today, right? That's not what this is about. This is just to kind of give you an example, right? So you then have this kind of range, right? So if we said, from the top here we got 37, just open up my calculator, right? This is going to make it a little bit quicker for me. So if we got 37 and a half as the top, right? Close enough. Then we've got plus 21,000, right? That would give us, no, I would have 37, sorry. I would go 37,500 plus 21,000 would give me 58,000, right? So the top of the range, the top of the range, right? It would be regarded as 58k, right? That's where you'd want to be looking at a ultimate extension, right? Now the issue for me there is that if we go up that high, we've probably seen the market top, right? And we're going to see that then, like I said, through probably 2025, 2026 before we see any new kind of highs. Then we come back down to the low of the consolidation, which is 34.5, right? Oh, 304, let's go back one more. 34,500 plus the 21,000. So I've gone basically from the top the first time round and from the bottom second time round, right? Which gives us 55. So if I come back on a chart, I'm going to say, realistically, we'll have something like a 58 giving us the very top and a 55 as a potential target there, right? Which means my target zone from a fib extension, if the market is bullish, right, would take me to here. Right? This is the kind of region that I'd be seeing, right, as the top, right? Now that's scary because I've talked about this scenario basically giving us a triple top, right? We're very likely to run a couple of grand over based on Bitcoin and the hype, right? Which means we'd come up and we'd have the 1, the 2, and the 3 tops, right? That's a very, very shitty scenario if this would be deemed as a 1, right? Because at that particular stage, if we saw that as a 1, right, you'd have to come back down 2. But now you're talking about the cycle above the cycle here, which means we could be seeing 2 to 3 years of a corrective move, right? So that's almost like the last thing I want personally, right? That's the last thing. If you're going to be interested in buying Bitcoin, right, you're not going to short Bitcoin. The reality is, that's a scary place. If we get up that high here, right, I probably will not look at Bitcoin again personally in terms of making an investment in Bitcoin until 2025, the earliest, right? Now, obviously, the next thing is let's put the point and figure chart on, right, on TradingView. I'm going to drop down to a 4 hour because you got a lot more data. It doesn't seem for some reason. You can use things like this stock charts, right? But you get a lot more data if you go back down to a smaller time frame. Now, it's point and figure doesn't actually work on a time frame. It's just this is the way that TradingView seems to have used their charts to integrate it, right? Point and figure basically works on a kind of um, a percentage or a conversion based on the price itself, right? So say we've got the price set to 750. Every time the price moves up 750, it'll paint another X. Every time the price moves down 750, it'll paint another 0, right? So what you have is these kind of zeros and X's in terms of every one being 750. So regardless of the time frame, right? The time frame on TradingView, this is just to show, the kind of the data. So this is the data basically going back almost to the start of Bitcoin, right? So it's not from 2017. So Don't get that confused. Where we are then, right, in terms of these moves, we've obviously I've just shown the horizontal way, right? Now the second way is basically the vertical count, right? Now I can show you a couple of things on the vertical count, right? Now, if we look at, again, we're looking for these consolidation ranges, right? So you've got one there, you've got one there, right? You've even got one sitting in there, look, right? As the price kind of goes sideways before breaking down. Now, what you can do is you can look at the counts. Right now, let's just see if this one will work. Right? You've got the count. So for me, the consolidation technically starts there. Right. So what I like to do is I like to come in and I'd say, well, for me, the price is broken down and then we've gone technically sideways, right, all the way through the breakout. Right. So at this particular point, what have I done? Put the price rather than the date range. So I include the bars that take us out of the range, right? So that's 14 bars. If you look at the box itself, so it's 14 bars. I'm going to keep 14 in my head a second, right? What I'd be looking for then is I'd be coming through this to here, right? You could probably take off 2 bars, right? So I'm going to say, let's just write this down. I'm going to go 12 to 14 realistically, right? 14 is, it's just giving me a range. So all I'm looking for is a zone, right? So 12 to 14. I'm going to go 12 to start with times 750 times 3 give me 27k, right? So from the bottom, from the top, we're going to look at from the top being the higher, right? That obviously would give me 27k down there, right? So that's the first kind of target. Now, as you can see, the beauty of this is that, it's probably the center of the consolidation, right? So you can see how these things work. Now, the next version, right, is to look at the same consolidation range, right? And what we want to do is we want to find the high. So in this case, because we're looking to go down, right? This is the high, right? So the high is there. The next box after, the next downside, right? We want to count the X's or the zeros. Now, in this case, because we're going down, we'll be counting the zeros, not the X's, right? So we've taken a hand. This is now for this is now the vertical count. So what we want to look at is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? So we've now got 11 as that count. Right? We've got a high point there. Change that so it's different. And we've got a low point, right? Which technically the low of that consolidation would be this one, right? For me. So there's my high, there's my low. We've got 11 count. So what I want to do is exactly the same thing as the horizontal count. I want to go 11 times $750 times 3 will give me 24,750, right? So I'm going to go from the very top. I'm going to go 24. Let's just do 24,750. That's close enough. And I'm going to go from the very bottom, 24,750. Down a bit further. Down a bit further again. There we go. So in essence, right, what we've got here now is this kind of range, right? Now, as you can see from what I've just drawn, I'm going to get rid of this one. What you can see from what I've just drawn, right, both the vertical and the horizontal kind of come to the same range, right? The beauty of the vertical is, look, we tagged basically the 50% marker of the bottom and the top range, right? So that, you couldn't have predicted that drop, better in terms of the outcome on something like this, right? Now, this obviously isn't always going to be the case, and this doesn't, it's not like this is a bulletproof version. The reason for me that I like this, right, is if you go back to a regular chart, what I'm going to do, I'm going to stick this on yellow, I'm going to stick this on 4 like that, right? What you'll find now is coming back to a regular chart, I want to see on a bigger time frame, let's go to daily, I want to see something of interest along that yellow line. But what do I see of interest on that yellow line? There's my support, right? What do I see of interest over here? What's there, if anything, right? The interest in play there, look, is we've gone basically to what I would regard as the first major one, right? That area, that level of interest, we then break through it, obviously, on the way through, come back and retest it, and there is almost a catalyst, right? That move is obviously given something, don't know what it is, don't care what it is, right? It's given something to give us the rally, right? The price has come back, look, and back to the same kind of region, right? So that's how you'd use point and figure, right? So it's nothing, like magical, it's nothing mythical. The general idea is just to give us kind of zones and forecasts, right? So now, if we look at what we've just seen from the downside, we've got a couple of things happened from the downside. Right? Let's see if we can find an opportunity to calculate what we see to the upside. Right? Now, I've just put these obviously on bottom and tops. I'm going to come down to a 4 hour, come back to point and figure. What I'm going to look at now is we've had this consolidation range. There's basically the high, and that clearly is my low. Right? Now, as the inverse to what I said, some of these brush marks. Right? Now, as the inverse to what I just showed to the downside, we want to calculate to the upside. Right? So we want to look, first of all, in terms of where our consolidation range starts and ends. Right? Now, for me, like I said before, I kind of like the idea of the two candles, one that breaks it and two that starts it. Right? You can be, into the zone, right? And this is where you flip back to regular chart, you see if you can see any auction areas or anything of interest, right? And you'll start to get a feel for it kind of naturally, right? So again, what we want to do is we want to count, first of all, I'm going to do it two ways. I'm going to count the date range. From there to there, we've got 13 bars. Right? So I want 13 bars times 750, right? This could be 11 bars times 750. So I'm going to do 11 first, times 750 times 3. That would give us 24,750, right? So I'm going to go bottom and top. I'm going to do a price range from the bottom, 24,750. There we go, that's close enough, right? So there's your first from the bottom. I'm just going to copy that, and I'm going to go to the top. Right? So there's my range that I'm looking for in terms of that extension. I'm then going to come in and say, let's give myself a 50% marker, 50% marker being around there, right? And that's obviously 44,800, right? That's your kind of target that you'd be looking at in terms of the upside based on the point and figure vertical count, right? Sorry, horizontal count. Then we're going to look at the vertical equivalent. So I'm going to get rid of this. Yeah, let's get rid of this. Right, so there's the top side. What we're going to do is do exactly the same thing, right? But this time we're going to look for the low, and we're going to count the x's because we're going to go x's rather than zeros based on the low and the price after it, right? So you're not going to see this until obviously after the breakout, but the idea of this is a little bit like Wyckoff, right? You're looking for that confirmation. So once we've had this in the pullback, right, this will give you the extension as to where you expect the price to kind of end, right? The price to at least hit target, whatever you want to call it, right? So if we look at these kind of levels, right, we've got, and you can see I'm not being accurate there, right? You can see this, it's 25 and I've actually got 24,750, right? So for me, this is just good enough. We're going to look at the X's. So I'm going to zoom right in, right? Because I want to see the X's after the low. So I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, right? So I'm going to go 12. I want to do 12 now on the, this is the vertical, so I want to do 12 times 750 times 3 equals 27 grand. So I want to then do exactly the same thing in terms of a box. I want to go 27,000 from that low. I'm going to do this. there's my 27, and then I'm going to do 27 from that top range there. And as you can see, both of them give me a rough estimation. This one being slightly higher, right, at a 47 kind of range. So overall, right, you could look at both options. You know, you wouldn't tend to use both. You tend to use one that you kind of have analyzed based on the instrument, right? So, you might find that for gold, for example, that it might be a vertical count that works best, and for oil, you might find that a horizontal count is better suited to that instrument, right? So anyway, the general idea, look, right, is this kind of region would be the two counts, right? So this, for me, the reason that I've showed this today is more, like I said, the example to show you the counts, right? And I will go in, obviously, to the Forex counts now in a second. Um, Obviously, in terms of this, come back to the candles, right? And this is basically the the area of interest, right? So as you can see, we've had one ping and one rejection, right? So for me, I'm kind of happy with this being a hyperextended B, right? We've come up to a point and figure area of interest, come out on the daily. We haven't done anything other than, what we'd expected to see, back there, right? That's the kind of region that I like. I don't like this one, obviously, up here, in terms of if we get up there, then, crypto market for me is doomed, right? So if I take this off and I get rid of this one, I'll keep these on, right, for later. And then I'm going to show, obviously, some of these other things. We've obviously got the couple of obvious spots. Where was it to? This was the master levels, right? A couple of things that have happened. Now this, the master level, these were kind of painted probably a year or so ago, and we've respected them, right? We've hit them, we've kind of tagged them, we've done what we should have done to them, right? In the grand scheme of things, the areas of interest still for me are down lower, right? And this is why I think Composite Man is going to want to be accumulating in this kind of region, right? That for me is all the logic, right? We're going to have to come back down, I would say, at least under 30 for Composite Man to buy this up, right? And that's where we are, right? So kind of enough for me on Bitcoin, enough on point and figure, right? I kind of think you get the gist. That should be pretty obvious. Go and have a look at the article that I posted earlier here. Stock charts, obviously, if you missed that again. Um, just have a play around with it, guys, right? There's nothing complicated about it. It's not the be all and end all. It's not something that's going to work every time. It just gives a rough idea, right? And as I said, what I personally like is once I've got my rough idea, so once I've got these kind of guidelines on the chart, right? I want to look back and I want to say to myself, look left, what have we had that happened over on the left, right? Well, as we kind of come up to this level, we've obviously had the reaccumulation for a move up, right? We had the distribution from the move down, right? We've come back up to the same kind of region. So yeah, definitely an area of interest, definitely high levels of liquidity. And the reality is, you probably, even if I put something else, so like I forgot to say the footprints on, for example, as you can see on the footprints, right? We've got red and red. I know I've just painted them green, but we've got red and red, right? At both bands, right? We've got it just above the one and just below the other, right? So for me, that was clear signs of selling, right? Which means we've definitely got a lot of sell orders there. And before I put the footprint chart on, I've just shown you how to read that without the need of an indicator, right? You can use your point and figure and you can get that extension level. You can see that on the back of what happened within that zone, right? So the clues are obvious. We've got stochastics saying, hey, we're overbought. We're in a key area of sales from before. The price dropped down drastically as we reached these levels before, and we've just hit the point and figure level based on the consolidations down low, right? So, all in all, guys, these things are not, lucky guesses, as I keep joking, right? These things are, it's logic. It's very, very simple to apply this logic to any instrument, right? But within reason. And part of the reason for me that these things work on institutionalized instruments rather than shit coins that are very easy to manipulate, right? And that's all it comes down to, okay? So enough on that. I'm going to switch across really quick to the advanced get software. What I'll do is I'll hide the window in the background, which is easier to see. Now, in terms of advanced get, right, there's a couple of things, obviously, where we are bigger picture. So we've got 3-4 on euro, which is what advanced get is suggesting, which probably means we've got a little bit more to go. Probably a little bit more to the downside based on this because we've only technically had a pullback A, pushback B. We're going to see a C, right, which means we've got to come down. Let me just check on my trading view charts. So yeah, bigger picture. Yeah, so daily is ultimately already at the overbought situation. We've got a weekly again at the overbought. So I think for me, guys, down on euro with a view of going up bigger picture, right? So that's currently what I'm seeing. And I think, as I've said before, the advanced get software is quite old, so the count is probably off. I don't like it as a 3, 4, 5 move down, but I think we now have to go down on the daily time frame, giving us the ABC type move, and then I think we can kind of carry on back up then for a little bit longer, as obviously the DXY moves on a monthly time frame back down, right? I'm gonna do these in order to my list, just so I don't kind of skip over anything. Now I kind of like this one, right, in terms of going up again based on DXY kind of gaining some momentum, right? DXY gaining some momentum will potentially help this particular move. Now I think this is the inverse of what I've just shown with Euro. So I think we go kind of down to go up, right? So we're probably at the lows there of an A. We go up for a B, back down for a C. Let me just double check on where we are with the weekly. On a weekly, we got a false bar to the upside, right? Which means, I think for me, the shorter time frame, let's look down. The shorter time frame is that, yeah, we go back up here, right? So this is probably the A. Go back up B to come back down for a C, right? That'll complete then obviously the fall, and then we go up. So I kind of like this as a situation. I think, yeah, it's probably the A leg for me, right? Next one then is Aussie dollar. As you guys know, Aussie dollar is the one that I'm really stalking. This is the long time frame trade. This is the bigger move for me. And what I'm actually seeing with this one, right, is like I said about not liking the counts. On a bigger time frame, I think we've actually got a 0 to a 1, right, which is the impulsive move that changed this character. We've come back down for a larger scale 2, right? This now is obviously the accumulation range within 2, right? And then obviously I think we've got 3, which is based then obviously on the DXY weakness after we've had the rally in the strength, right? So for me, I like this. New Zealand dollar is going to be more or less identical, right? That's kind of how I'm seeing this, right now. Then obviously we've got the Euro Japanese yen. So let's do Euro yen. Um, Euro yen for me probably very similar to GBP, JPY. Euro obviously being more the driver in terms of DXY. So I think as we expect to see a move down on the euro, right, that will equal the strength in DXY. So I think we kind of come down. I think A for me on a monthly time frame, mind, right, is currently being formed. So I think we still have some room. Let's just double check on the monthly stochastic. Yeah, so monthly stochastic, guys, right, to give you an idea, and you can check this for yourself. Monthly stochastic, we're already overbought, right, massively. We have got a false bar, which means I kind of feel that we do come down, right? Weekly, we still got some room down to the downside. So I think for me, this is very, very likely that the A is being formed. We'll come back up B, we'll come back down C to finish a 4, and then I think bigger picture, we can obviously rally, rally nice. So I think for me going into next year, we should be seeing, kind of strength in Euro JPY. Probably Q1 will be weakness, Q2 onwards being kind of strength. Right? Um, Japanese yen with the dollar. Well, obviously this is going to be the inverse of the XY. So in the grand scheme of things, I think just type in JPY. I think grand scheme of things monthly, we're going to have a little bit of weakness. So I think for me, this move that we are seeing right now, four is probably in, which means we've got a lot of divergence, kind of going back since the COVID time. We've got a lot of divergence now starting to kind of show signs on bigger time frames. I would say for me, four looks to be in potentially, right? It could actually be a deep A followed by a B back down C. Either which way, I think we probably come down on the smaller time frames. That looks like we've got an ascending move. So I think kind of weekly moves, we probably look at coming down. So look on the weekly. Yeah, we've got still a bit more space weekly. Monthly is already overbought with some room down. So I think for me, guys, the way that I'm seeing that at the moment is we might have a little dance around the top. We're going to probably play with this 3-5 level here, which is obviously the 152 that I mentioned some time ago. I think we have a little play around there. We probably create some kind of distribution pattern over the following weeks, and then the distribution patterns. I don't really expect much of a rally. I think we could create, a couple of buyers climaxes followed by UTs and UTADs, but I don't think it's going to be an aggressive rally in this yen pair. GBP USD. So GBP USD. Weekly time frame 1, 2, 3. So this is technically pointing down. I think a little bit of strength in DXY means that we probably come down a little bit further. So I think for me, I kind of see this potentially creating again, kind of double bottoms rather than going down deep. There is obviously liquidity in and around this area. Have a practice, guys. Go and use point and figure and see if you can work out where downside targets could be. It'd be interesting for you guys to share some of these on some of these pairs. If you're trading, I know some of you trade different pairs. Um, it'd be interesting just for the group in general. Don't be frightened. You can't really get anything wrong. It's not basing a trade on it. It's just kind of some input would be useful, even from my perspective. In terms of what are you lacking, what are you gaining, what kind of confidence are you building, and we can kind of build on it from there. Next instrument, we got USD Canadian dollar. Now, as I've mentioned before, right, Canadian dollar is relatively closely linked to oil. So as we'd expect, one of these moves. So technically, this is pointing up. We got a 3 up, 4 down. We could actually be seeing a 1, 2, 3, 4, maybe. Um, 1, 2, 3. I think for me personally, this is a weekly time frame, so I think we probably go probably down a bit deeper on this. Looking at it, I think we come down. So look at the monthly. So monthly is not quite overbought, but it is starting to turn down. The weekly is actually pointing all the way down, actually in oversold, which means we could be looking for a little bit of a move on the weekly, but we do have a false bar on the daily. So I think for me, shorter time frame, I think we got to complete this count kind of properly. I don't think this is a 4-5, and therefore I think we're very likely to see some kind of accumulation, right? Which means kind of for me down sideways type action, right? I'm not painting this in terms of what I'm expecting. This is just, I'm expecting a sideways range. Like I said, the inverse of, I think it was, might have actually been Australian dollar. Expect potentially kind of UTADs, UTs and so on. There's an element of you could expect some kind of slightly lower lows to confuse people, get them going short before we actually see, a move. And again, it's going to be related to both oil and DXY. Right? Swiss franc. I mean, this is a pretty boring pair in general. This is something that kind of goes sideways for years on end. If you can zoom in on that, you can see it's pretty much sideways. Advanced Get is suggesting that the bias is kind of down. So I think for me, looking at a 1, 2, 3, 4, we can look at the extension. I think we'll have some strength in DXY, which means weakness in this. So yeah, probably a bit more down. Let's have a look at this on a monthly time frame. Monthly time frame, it's kind of probably 30% pointing down. So I think down for me still is the bias there. We've got the over sold in the weekly, so maybe a little bit of a pullback. Pullback to down. We have got a false bar on the daily. So, you know, again, guys, I personally don't trade this one. I spent a lot of time in Switzerland and, just kind of had it in terms of what my euros were worth um, when going there or when kind of planning to go there. In the grand scheme of things, I kind of avoid this one normally. It's not one that I would trade in terms of an investment or trying to make money out of it. Yeah, I think, look, guys, probably a little bit more down. We've clearly got some kind of, some kind of action area there. So I think kind of down, play around, a little bit of a pullback, kind of continuation on down. So see that as potentially redistribution rather than an accumulation there. Just kind of where I'm seeing it. Euro GBP, very similar for me in terms of um, Swiss franc. I obviously moved from the UK to France nearly 10 years ago now, and a lot of my kind of trading activity is still done in pounds rather than euro. So this for me is something that, I'm not really interested in. It's not going to, make or break it for a couple of pence either side. This the way that I'm reading this, it's 85 pence for every euro that I buy. Um, in the grand scheme of things, going back, I think 2016 when we had the kind of Brexit announcement, the price was around the 70 pence, which obviously over Europe was quite nice. From a living in France, kind of earning from the UK perspective, this was obviously a lot nicer for me, kind of this time frame. But just like Swiss franc, this kind of has come up and stayed sideways, So in the grand scheme of things, I'd love it to drop on a personal level. The more it drops, the more I get kind of, value for my money. But in the grand scheme of things, I think we've got, daily sat a little bit higher, so probably 60% on the daily. And I've just realized I've shared some of the things on the TradingView chat that obviously I haven't shared on the screen, so I do apologize for that. But any questions, ping me in the chat sections. Weekly we've got oversold. Monthly is actually already oversold, pointing upwards. So yeah, I wouldn't be surprised if we get a little bit of momentum to the upside based on DXY's weakness. And that's pretty much it. I'm just looking at the other bits and pieces. Yeah, so I think for me, Forex is kind of covered. I have put two or three other instruments in, right? So I put Apple as one, right? So this is Apple on a monthly. Obviously, I think DXY strength would give Apple a little bit of weakness, right? And that's just, without looking at the numbers and the fundamentals. And therefore, I think we probably see in right now an A followed by a B. I'd like to see a C based on the DXY strength. And then I think obviously we can kind of continue on up because that will give us our Apple fall, right? That, is a good indication. Companies like Apple, it's a good indication in terms of what the stock market is doing, overall. Amazon is another one. So, Amazon in there. Yeah, AMZ. There we go. Load Amazon. I think for me, again, like with the advanced get count, I think we probably see in very comparable to Apple. I kind of see this as maybe a 3, which means we could very much be just in front of Apple, which means if this is a 3, we've come back down for a 4. We probably see in the first leg. So for me, I would class this as my 4 rather than the 3. I think we've gone up, based on the grand scheme of things. I think this is obviously the first leg. So you can probably do some fib extension work on this and find your one extension. Maybe come back down for a deep 2 based on the liquidity, down around there. And then I think we can kind of go up and create some new highs, potentially on Christmas earnings. That could be a very good stock to look at as we come back down to these kind of ranges to go long. So that's Q2 next year, realistically. Then I done Tesla, I think earlier. And I'm just going off for a couple of you guys have talked about in the various chat channels. I think for me, Tesla probably very similar to Amazon there. I think we've had the fall, which means we've probably come up now. However, that doesn't look impulsive. So I think we have a look on Tesla. I'm sorry, guys, I'm going to do Tesla on TradingView. So I know you can't see this at the moment. So Tesla TradingView monthly, we probably got a little bit more down. So I think this is where flipping between these two things, we got a little bit more up on the weekly. So I think that could even be an A followed by a B followed by a C, which means we're very likely to go up medium term, back into this kind of territory, followed by another move back down, potentially creating some kind of double bottom or something in that range. And then I think obviously we kind of carry on up, right? So I think for me, there's a lot of, downside to this, but I think that downside is, not short-lived per se, because I think for me, I don't think we've had the real rally before the big crash, right? And I think this is where DXY, for me is 115, 120 in the grand scheme of things. What else did I cover? I covered Broadcom. I think I done Broadcom earlier, so let's have a look what I put in here. Boom, boom, boom. What is Broadcom? AVGO. So AVGO, yeah, obviously this kind of parabolic at the moment. I think in the grand scheme of things, you can't see this other than being a decent impulsive move. I don't really like this count 1, 2, 3, 4. I think if you were to run some extensions on that, then I kind of feel that with this kind of hyper extension, we probably need some kind of relief, back down, which means unlike some of the others that may have already had their A, I think we could expect a sharp-ish A based on some DXY strength, right? And kind of nothing else. I think obviously the numbers and the reports and all the fundamentals going around the stock that could look different, and I'm not, I'm no longer into that, right? I don't really care in terms of what they're doing, why they're doing what they're doing. But if you're looking at this kind of longer term, then I think for me, kind of take your profits and run would be a good option to at least start considering now. Maybe do some point and figure analysis in terms of the upside potential. Um, then I think you've got a pullback. I think the pullback could be a good place to buy the dip and kind of go again. That could be a nice reload in terms of a trade if this is something that you're interested in. What else was there? There was one other, and it's going to bug me now for the life of me. Let me just do GAP and look for something. With Broadcom, we had. I can't think for the life of me what other. What other? Ah, yeah, maybe there you go. I think this was the last of lot. So back down to a weekly time frame. Guys, look, I think for me, the stock market, right, this is where we are, I guess, kind of overall. I think we've got, a big distribution play, right, kind of across the board. The question is how deep, this fall becomes, right, if it is deemed as a fall. It might be that, this is technically our one, and we come, all the way back down here for a, I can't even draw two, put that in as a two. We could come all the way back down for something that looks like this, right? So the reality is, I wouldn't just go short in it. I'd sell off something if you've got it in the grand scheme of things. Um, I think in the next level, once we get a little bit more of a clue as to DXY's overall strength, if we go back up 113, 114, 115, you're either going to see it accelerating or you're going to see it kind of slow down. And I think if you see it slowing down, then this should obviously be down relatively low, which could be a spring. If it is accelerating, then I think we could come down for a deeper move. We've got technically a nice big gap sitting in there. Look, okay. So there's a couple of things to be wary of, in this one, but I think the overall sentiment from you is pretty much the same. If you go back, sorry, let me finish on that. So I've just finished now on the advanced get stuff, right? Um, I'm gonna come in and I am gonna go back to this one, take this one off, and put the trading view chart back on. And guys, this is coming up to an hour, right? So I really want to finish, this. I know this is a very long one this morning. Well, this afternoon, no? But I really thought this was important before Christmas. A couple of other things. Now, obviously, the VIX is the volatility index, right? So I think, what was this on? Maybe the visitor section. I think Peter Hammer kind of cottoned on to what I was trying to say last night. Yeah, is, if we are up and around here, guys, right, this is obviously something that I think with the DXY strength that I do feel, we've had that kind of, we've had that drop down. And I think it's only a matter of time before we really, really dip underneath that, right? I think we've got, very interesting position. Monthly, obviously, and this is slightly different than the other charts, right? So this is pretty much a sideways indicator. And what you're looking for is that when this is down low, you kind of expect, kind of bad things to happen. When the price is kind of, well, the price, when the level is at kind of high, and I've marked these out, what I've seen is 12, 24, 36. You seem to be a good little average. I think when the price is kind of on its way up, then you'd want to be seeing a good run in the stock market. When the price is kind of coming from the top, coming down, yes, you can still see a rally in the stock market, but the kind of interest is less, right? It's dwindling from an institutional perspective. Right? So all of these things combined are signals for what I think could be in store for 2024. Right? We've got strength in DXY one way or the other. It's just a question of how strong. We've got the VIX down, obviously low. We've got Bitcoin hyper extended and no real logic as to why it would go up. Even if the BlackRock ETF is approved, guys, BlackRock don't want to be buying. If they want to be buying, they're not going to be buying at premium prices. So all of these things kind of scream, hey, we're ready for something to happen, right? I'll come back down to the DJT in a second. In terms of SPX, I've talked about SPX with the move there, 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 there. Where was this one? This one, this one, this one. The trend. I've got a few things. Yeah, there, and there. Okay. I talked about this back, either earlier this year, um, in terms of what I'd like to see right now. I've got this kind of painted. I think we do see a new high, as Paul has mentioned on a couple of his streams. Um, you tend to get these kind of major rallies before, the kind of calm before the storm or the fun before the storm. And I think this is my concern with the likes of Bitcoin, is that I can see us making a new all-time high. That kind of, brings confidence to the market. We've got VIX obviously down low, and therefore I think kind of something catastrophic is kind of in store. It's just a question of timing on it all. Um, yeah, so I feel the same sentiment, right, which is kind of negative in the grand scheme of things, but it's kind of negative for good reason. Then we've got this, right? So we're at kind of a crossroads now. The DJT, right? This is the Dow Jones kind of transportation average, right? Now the reason that this is kind of useful again, you might not have heard me talk about this, but I got a couple the one thing, in industry, when the transportation industry starts to fall, it kind of suggests that the buy-in, the spending across the globe is kind of dropping. Right? Now, obviously, as I've said with COT data, this isn't the be-all and end-all. This isn't the holy grail. This isn't the silver bullet. The reality is you want to be looking at what it's trying to tell you, right? The issue that I have with this personally is we're coming up to Christmas, so you'd expect this to kind of rise anyway, right? Because a lot of people are sending things for Christmas and so on. So, however, we've got this ascending move right here. Now, we've had obviously a strong month, which means we could easily come up, which means Q1, Q2. We could see the reports coming in, obviously Q1 based on the Christmas results, which means expect another little rally here. But obviously, this then leads to potentially an earlier drop in terms of, the Q1, kind of early Q1, um, in terms of a drop down there, right? So zooming in a little bit closer in terms of the weekly look. The issue that I have here is that it's not going to take a lot for that to drop, right? Once Christmas period is over, reports are kind of in. I would expect obviously a little dart up followed by that drop. Now, obviously, that's a concern when you couple everything I've just covered over the last hour, right? In terms of where we are market wise, what the potential is market wise, and what I think we could do in terms of the market, right? So, again, I've just finished, hopefully, yeah, 1 hour exactly. So, I'm going to knock this on the head. Thanks for watching, guys, and sorry it's a long one. So, enjoy obviously Christmas if I don't do another stream before then, for you subscribers. Thanks for the support, and obviously, guys, feel free to just chat. I mean, you're not going to learn anything unless you're asking the questions. Anything you don't understand from this video, ask. Right? Anyway, enjoy the holidays, and I'll see you on the next stream. Cheers up.